Are you seeing any trends in terms of investments at the application layer, which is where a number of you invest, versus the infrastructure layer, which ostensibly could be more horizontal and support multiple, companies supporting multiple different verticals, and how you see your firms spending, investing their dollars?
Yeah, I can maybe start off just because I historically do both. I think if you look back a year or two, I've kind of moved from more infrastructure to tooling and then now much more application layer. So I'm spending almost all of my time at the application layer. And part of that is because I'm a seed investor. Like I think investing at some of those lower levels at this point in the cycles is really difficult. We have small funds and we're not kind of doing $100 million seed rounds. But also I think it kind of talks to the opportunity that we see again within these verticals. So I think there has been, and I think generally you see, at least at the early stages, you see that general trend.
Okay. Other comments on that trend, application layer versus infrastructure layer, vertical
For,
versus horizontal?
for us, I think historically we've tended to shy away from the infrastructure layer just by just because it tends to be very capital intensive with a few winners. So there's always a risk that you can sink a lot of capital and back the wrong company. So I think in the application layers you can find like many winners. But in the infrastructure layer, I think the risk of your commoditization is very real, and the risk of being disrupted is quite high as well. And if you think about the cost or the capital necessary to be a competitor in the global stage is really really high. I think we've seen it in Europe with contenders to OpenAI, like the likes of Mistral in France, etc. It's very costly just to buy an entry ticket in that race.
I would add, I mean, one of the interesting dynamics at the app layer is just the sheer number of competitors in a defined category. I mean, I would have thought 4 or 5 years ago, again, I do A and B. So at the A and B stage, it was usually there were two or three there, and you could be logical and rational and you kind of figure out the one or two. I mean, I feel like when I'm looking at an A now, I've got eight to sort through, and somehow you've got to sort through them all before somebody else does. And I'm intrigued at the seed stage how you guys are, what you are weighting, whether it comes to industry expertise versus technical expertise versus just recognizing you have to invest in more companies given you're in a 1 in 8 world versus a 1 in 4 world or something like that.
I think that's been the hardest thing at pre-seed and seed is you used to see maybe 10 companies. Now it's like 20 and they all have revenue. And so revenue is no longer, I think, as high of a signal because it's also understanding that revenue and where it came from. But I think at the earliest stages, to me, it still goes back to the founder. Like, is this founder amazing? And then they'll kind of figure it out. But I think weighing that, especially in the vertical side, it's like the AI expertise plus the domain expertise is sort of that sweet spot of founders for me, where you have the business sense and insights, and then the very strong technical leadership to go build something there. But it is kind of wild. And, we run PairX, which is our early stage accelerator. And so next week is my week to go through all the B2B applications. And I can only imagine that there will be, 20 plus in each category of trying to sort through. But for me as an investor at the earliest stages, it usually just comes down to like the best founders and broadly building in a big enough market. But I think the best founders win every time.
I totally agree with that, and definitely that's our approach. I'd say in addition to kind of grabbing the best founders, and especially like really looking for kind of speed at this point, like the speed of execution, speed of iteration, maybe even more than in the past. That's always been important, but especially now, I feel like we're kind of all going down towards a longer tail of like sectors that you can build a vertical solution in and trying to be kind of a first mover with a really fast moving team in a space where you can still build because you're replacing labor, a multi-billion-dollar company. So a little bit's that, as opposed to hopefully not having to go into a space where there's 11 Series A companies, because that is a seed investor that seems like a tough bet.
So given the heightened level of competition, number of companies being funded and pursuing different applications, crowded competition, what advice would you give an operator, founder, CEO, head of product on trying to develop competitive advantage, differentiation within AI? What are some of the trends that you think and strategies that you see working?
For me, I think the cost of building software is going to strangely to zero. So I think it's hard to gain any kind of advantage on speed to market or so in the end it comes down to product and then if you want to build a better product, it comes down to hiring the best people. For me, I always advise founders, just hire the best people, and that's going to be your competitive advantage. And the second thing is like be very thoughtful about how you build the product, because it's not going to be you can't differentiate on the exact value proposition, but you can differentiate through the workflows and the customer experience. So I think today the customer experience, the bar is raising significantly, and people just expect more from products. So for me, I always tell founders, go back to the basics, hire great people, focus on the product, and then I think distribution can sort itself out.
I think small tweaks in distribution in the early days can make pretty big differences. I mean, I think Hadley, you brought up healthcare. I mean, I think a bridge is the canonical example of that, where that Epic partnership really changed the game. I mean, I'm in one of the PLG centric scribes where just the act of letting a doctor try it out, self-adopt, which is highly unusual for that area. I think that's really given some energy to a crop of companies that might have otherwise faced some hurdles. So I just like cleverness in early go-to-market seems to matter. And yeah, to your point about what the competitiveness, like I was on Tuesday, I was at Clock, which is a legal tech conference in Vegas, and you just walk in the hall and you know, good for Harvey, good for Lagor. Like my instinct was, as Hadley said, when you have to go down to a more deeper niche or more verticalized version of that, because I was thinking after that conference, like, I'm not funding anybody else to go after the AmLaw 100, but I would be interested in funding somebody going after a particular subset of law. But yes, it was quite the experience to walk around a legal tech conference and have 3 generations of legal tech products and 50 vendors all selling, a lot of overlapping products. So I think as a founder, having that experience would probably be meaningful.
One other thing to add on this is, we're hoping to, in terms of advice I'd give is to kind of have a second or third act in mind. Like these things can be hard to predict, but generally, I'll give you kind of an example. There's a lot of these companies, and we've invested in a couple of, there are these kind of voice agents for kind of answering the phone, which it adds a ton of value right away for certain types of businesses. But it's not defensible. So like, okay, you can start with that and you can actually grow. Like some of these companies are going from like 1 to 10 in 1 year, but that's going to get commoditized. What's the second act there that you have? Maybe it's a system of record, or my personal favorite is maybe there's a B2B marketplace, which I still think is different, is defensible even in kind of an AI world.
I think the two big things that can help a company in the early stages. One is I actually think like brand and storytelling and like having some unique reason or like insight and then leaning into that. I think brand is going to become a pretty important part of the way that the winners sort of emerge, and having that DNA early, I think is really important. And the second is I actually think distribution matters a ton. Early distribution. How do you hack early distribution and have some sort of unfair way that you're going to get your first handful or first 100 customers? And then how does that create some sort of, unique moat around distribution for you? I think those are two things where, a lot of the products are actually becoming quite similar. But that's where I ask a lot of questions and diligence around those two things. And like, do the founders have good answers there and good instincts? And maybe it's my background as an operator on the go-to-market side, but like, I just don't think the best product always wins. I think you also have to win on like the best product plus differentiated go-to-market and some sort of network effect or like unfair partnership or unfair like founder brand that will help you grow faster. Is you look at every winning company in the tech space, they had something like that. And I think it's not only like a nice to have, I think it's mission critical in this like super competitive landscape that we're operating in.
I have just one more to add, and honestly, I hate this, but like you are seeing a decent amount of like king making, just raising a lot of money, and then everyone else is scared shitless. I think you saw this with Harvey. I doubt that was the best product from what I've heard, but I think there's a lot of that going on as well, which I dislike, but it's happening.
I keep on hearing people use the word the FU round. It means like, I don't need to raise this round. The milestone hasn't been achieved, but because I can, let me detonate that bomb. And then, I'll make a statement.
Make a statement to the market, stay away.
Yeah.